Claire, thank you so much for joining me on Payments Unpacked TV. This morning, we were on a panel together at the Payment Leaders Summit, and just here we are just a few hours later, we're talking on a podcast. We've called this podcast 1 Year On, Reimbursing Victims, Reducing APP Fraud. But before we dig into that subject, I'd like to just commit just a few seconds by positioning our discussion. And I want to do that by looking at the title in reverse. And to do that, I've got 4 quick fire questions for you. So here we go, quick fire questions. Payments 101 question, what is APP fraud?
Authorised push payment fraud is when a fraudster tricks you into sending money via your bank and making a payment into their account.
Perfect. And the second one is, how are regulators and payment firms seeking to reduce fraud?
So our reimbursement requirements incentivise banks and payment firms to invest in better fraud prevention through better transparency and other tools such as the requirement to provide confirmation of payee. We've seen a notable increase in fraud prevention approaches being adopted by payment firms over the last few years.
Perfect. Number 3, who are the victims here and how are they being reimbursed?
So victims could be anybody, not just the elderly or the vulnerable. Our policy protects consumers, micro businesses and charities who are tricked into authorising a payment to a fraudster. They are reimbursed by their bank, but their bank can recover 50% of the cost of reimbursement from the receiving firm.
Very clear 3 quick-fire questions. My last quick-fire question is, what is this first anniversary that we're celebrating?
So we are celebrating 1 year of our reimbursement regime, which launched on the 7th of October last year. More victims than ever are being reimbursed for APP scams as a result, and we've seen a step change in the culture of payments to improve fraud prevention and focus all firms on protecting their customers.
Perfect. Thanks for the quick fire questions. You know, in a real Hamilton in the room when it happened situation 12 months ago, we were both in a room where the decision was made to introduce APP scam reimbursement measures. And here we are 12 months later looking at what's happened. Now, I know you've published some data. I know it's on the first 8 months of data, but I think it gives us a good indication of what's happening. So let's spend a few moments just focusing on what we've seen so far. And my question to you is, what has the PSR seen so far regarding the introduction of the scams reimbursement provisions? So I suppose to simplify my question is, what's your high-level snapshot performance for the first year?
So reaching this first anniversary of the reimbursement policy is a huge milestone. We've seen a strong, positive early outcomes with payment firms stepping up to prevent fraud from happening in the first place and victims being reimbursed quickly. The policy is already making a difference for consumers. Reimbursement rates are high and have significantly increased to 88%, up from 66% in 2023-24. And remember that includes some key parts of our policy like the £100 excess and the maximum level of reimbursement at £85,000. There's also been an increased response time to claims, with 84% of cases being dealt with within 5 days.
It's interesting to hear that snapshot. We've given us a few figures, but let's dig into some of those numbers. What levels of money is being reimbursed to the victims of APP fraud, and what percentage of reimbursement claims are successful?
So one of the key things about this policy is the significantly improved fairness for consumers. So the reimbursement requirements apply to all firms, regardless of who you bank with, which is a significant shift from the 13 voluntary firms that operated an APP regime previously. You can see the reimbursement rates are high, and that is high across a larger number of firms than ever before. And this is significantly increased, as I said earlier, from the 66%. In the first 9 months of this policy, £112 million has been refunded to victims.
Thanks for that, Claire. The bar to complete the reimbursement claim process is high. When I introduced the account switching process a few years ago, I thought a 7-day process was a huge ask. Yet the APP scams reimbursement process requires all claims to be closed within 5 business days. After the first year, how are firms, both sending and receiving, managing in their adherence to this 5-day process?
Firms have responded really well. They've been submitting data promptly and resolving cases efficiently, which has been really great to see. It shows in the data that 84% of claims over the 9-month period were resolved within 5 business days, and nearly all are resolved within the 35 business day backstop, and that's around 97% of claims. This marks a substantial improvement in both the speed and the consistency of outcomes compared to previous years.
So it's good against the performance is good against the 5-day process, but actually also reflects well in terms of the old processes and things that would happen. I'm aware that there are various reasons why an APP scam claim might not be reimbursable under the PSR's policy. You know, things like a civil dispute might be a reason. What I'm interested in the first year of operation is how has the reimbursement policy performed in fairly deciding between in and out of scope claims?
Thanks, Mike. And this was a key and difficult part of the policy when we were designing the regime. But the policy is clear. It's here to protect consumers from app scams. So it was important that we defined this clearly. Since the 7th of October, the requirement applies to bank transfers made within the UK using what's known as the Faster Payment System, or CHAPS. So generally the way that we might make a payment using our online banking from one UK account to another UK account. What's not covered though is international payments, other payments methods, so cheques, cash or card, they have their own fraud protections in place. But particularly important, civil disputes between a consumer and their supplier are not covered. The law protects consumer rights when purchasing goods and services, including through the Consumer Rights Act. We want firms to make the right decisions though, and sometimes we recognise that that can be difficult. Firms are required to maintain the records of their decisions alongside all of the consumer interactions for claims which are in scope of our assessments.
We hear a lot about the need for consumer caution when making a payment. It's a fair point, but my granny is neither a banker nor a payments nerd. How has the introduction of APP Scam Reimbursement provisions led to payment firms playing the consumer caution card and refusing to pay out?
So we deliberately set the standard of caution to be a high bar for firms to be able to evidence that a customer was grossly negligent in making a payment. And a low percentage of claims have been rejected on that basis since the 7th of October. However, it is an important measure to have in place, and it should be one that consumers are aware of. Failure to meet their standards due to gross negligence could mean that a claim is not reimbursed.
Okay, thanks for that. And as I get to my last 2 halves of a question, the first half is that, Claire, you've been instrumental in the introduction of this consumer safeguard. What's your standout moment from the first year?
I think the fact that we're seeing a real change, that firms are stepping up, that scams are being stopped earlier, and reimbursement rates have significantly increased across the industry, not just in those firms that have had more experience of handling these types of claims. Victims are getting their money back, but they're also getting it back quickly. But I think my final kind of reflection was the efforts of the whole industry to come together to put this in place for the 7th of October. Firms, trade bodies and Pay.UK all played a significant part. The policy wasn't without its differences of views, but everyone wanted to see an orderly implementation, and we got that.
Okay, that's your standout moment for the first year. My second half of the last question is, what's next? Where do you go with this?
So the PSR's always been clear that it would make sure an independent evaluation would be carried out, and we've started that process 12 months on from going live. Bringing in significant reforms like this is a big change, and we're conscious that there may be things that could be done differently. That's why this evaluation is important, so we can assess what's worked, where there might be things we could do differently, and we'll get their report in spring 2026. I think one of the other things is that APP fraud constantly evolves, and if we want to have the right protections in place, we need to make sure that the requirements recognise that. So that is another kind of key long-term element of the policy.
Thanks, Claire, and we look forward to that report next year. Look, we've reached the end of our time together. Claire, thank you so much for joining us to mark the first anniversary of a world-leading mechanism that looks to set victims of fraud straight after being duped. I'm particularly pleased to see the PSR is commissioning an independent evaluation because looking at the introduction and the effectiveness of the measures that were brought in 12 years ago is a good reflection point. And it's been a privilege to share with you the first anniversary of the UK's APP reimbursement protections with you. If you want to know more about the PSR, you'll find them at psr.org.uk and you'll find Claire Simpson on LinkedIn. Thanks for listening, and be sure to subscribe to Payments Unpacked TV either on YouTube or via payments-unpacked.com. Thanks, Claire.
Thank you.